Hello, ladies and gentlemen. Welcome back. I like these videos a lot. I'm doing a Q&A video today. We've got a bunch of community questions that came through on my recent post. A bunch of questions about USDT versus USDC for holding and safety, about altcoins, which altcoins to buy, how to find altcoins. Should you be looking at the USD pair or the Bitcoin pair? That's very important stuff there. Indicators for identifying a bull market top. We've got a bunch of stuff here. 4-year cycle, what makes up the trend? Other questions, should you sell now and rebuy when the channel's broken or just hold and wait? Bunch of questions here. When would an altcoin season start if we have a normal cycle? Huge amounts of questions. I've left timestamps down below in the pinned comment and the description so you can skim through and look at the questions that you're interested in hearing an answer to, interested in hearing my answer to potentially. So you can do that if you don't want to listen to the whole thing. But I recommend you listen to the whole thing. I've chosen these questions, selected them, handpicked them out of the ones that were sent there. I didn't pick them all. We've got about, I think, 9 of them here. So I picked them because I know I'll be able to give a good answer, compelling answer, and something to, feed your brain, give you food for thought. So before we get into it, I'll just mention quickly, the weekly candle close on Bitcoin is coming in about 12 hours. We're going to discuss that in tomorrow's video. Bitcoin needs to get over 69,000 on that weekly candle close for it to be a good bullish close. If we don't, that's not the end of the world. It just means more consolidation is to come. We'll discuss that tomorrow, but today we're going to get into these questions. So before we do that, guys, a couple of things to get into. Just quickly here, our exchanges. That's the one thing I'll get into. Our exchanges, which are Blowfin and Bitunix. Now, I use Bitunix personally, and I've actually advertised it on this YouTube channel for over a year now. I use it every single day for trading, essentially. With my referral link down below, you will get a 15% trading fee discount, as well as access to the exchange, which is global non-KYC, no location restrictions from anywhere in the world, nothing, as well as getting access to hundreds of trading pairs, very low trading fees with the 15% trading fee discount, let alone without it, and access to an exchange that has never been hacked before with reserves information available. And the same thing pretty much on Blowfin. It's an alternative option for those of you who don't like Bitunix for whatever reason. Same thing, same referral link, a lot of the same bonuses as well. Both those links are down below. Take your pick, guys. Let's get into the content. Okay, so in no particular order, we'll just go from top to bottom here and we'll skim through them. First question, which is better to hold for your profits between the end of this bull run and the bottom of the bear market, USDT or USDC? So there's a few variables at play here. First and foremost, I do want to say, just before I say anything on the topic, historically speaking, they've both been very safe. All right, historically speaking, via price, which is what they're here for. Okay, they're here for price. They're stable coins. They've been extraordinarily safe. It looks like there's big wicks here. They're very, very small. It's only wicking up to $1.03 from the $1 peg. Very, very small. That was 4 years ago. Ever since then, it's been perfect. That's USDC, and on USDT, basically the same thing. Very, very small amount of deviation from the $1 peg. Historically speaking, I mean, these have been pretty much impeccable. USDT's been around for almost 10 years now. So, if we're going off history, there's nothing to worry about. But obviously, we can't go off history fully. These are coins that are subject to massive amount of scrutiny, especially USDT. So, if we're going off history, again, perfect, but we can't really go off that. If we're going off regulation, USDC is safer, okay? There's a few reasons for this. Now, I've looked into this very heavily because I obviously have a lot of, at times I've had a lot of money in stable coins. I don't want to be holding assets that I deem to be too risky to hold. And so one thing I do, regardless of anything, is I split up between stable coins. If I'm holding huge amounts of money in stable coins, you split up between them, you diversify the risk, and you cut your risk in half, essentially. But what I will say is this, okay? If I had to pick one based on safety alone, USDC would be my pick. USDC undergoes monthly attestations by big firms such as Grant Thornton, which confirms it's got a one-to-one backing between the cash and the coins they release. Another thing that's important about USDC in comparison to USDT is USDC has less risky assets in their holdings. Okay, that's very important. USDT has gotten a lot better with transparency in recent years. But the problem is the assets they hold are inherently quite high risk. Like they hold a lot of short-term US Treasury bills rather than just cash, plain cash. They hold a lot of speculative assets rather than just plain cash. It's a complete opposite of USDC. Another thing that USDC has on USDT in terms of safety is that USDC is distributed by Coinbase, right? It's a US-based company, okay? So being a US-based company, it has the high standards of US regulation, which is another bonus. And on top of that, it's been adopted by more institutions from the US who are looking for secure and stable assets, who have chosen USDC as opposed to USDT. So you've got the big players, the guys with, whole conference rooms full of analysts working on security of assets, determining that USDC is safer than USDT. I mean, that's a no-brainer to me. So do I think the USDT is inherently risky? No, I don't. I do think it's safe. Historically speaking, it's been very safe, and they certainly have improved their transparency and holdings over the years. But if we're talking on a purely comparison level, yes, if you force me to choose, USDC would be safer for long-term holding, but I still recommend you split up between them. One more thing I'll add here is if you're holding very small amounts of the coin, go with USDT, because USDC can have massive fluctuations in fees. Being on the Ethereum network, that's always a little bit of a problem. Well, not always, but sometimes if you're looking at like holding it in cold storage on Ledger, it's going to be on the Ethereum network. So watch out for that. When it's time to buy altcoins, what do you think about picking them based on whether they're outperforming Bitcoin? So picking them based on the BTC pair rather than the USD pair. So I really appreciate the sentiment here. You should be comparing the altcoin you are looking to buy with their performance to BTC. This is very, very important. You need to pick altcoins that are at least acting on par or better than BTC, even when it's a Bitcoin-dominated market, because this is the number one symbol of strength you're going to get from altcoins. A lot of people have the wrong idea when it comes to approaching altcoins. Okay, first and foremost, Bitcoin dominance needs to be going downwards. Bitcoin itself needs to be in a bull market. Then you can think about altcoins, because that's when an altcoin season begins. But people have the wrong idea. They look at something like Matic. Okay, Matic, Polygon, whatever you want to call it, Matic Network, is a coin that is down right back to its bear market lows, way back down to where it was in 2022. Some people will look at that and they'll think, oh my God, this is a strong support zone. That's an excellent price. I'm going to buy here because it can only go up. Well, that's the wrong mindset. I'll tell you why. All that Matic has proven in being at its bear market lows in 2024 is that in the last 2 years of positive price action in the market, when Bitcoin's gone upwards 4x, when a lot of altcoins have 10x, 20x, 30x, Matic has done absolutely nothing, and the small things it did do were completely forgotten, no one cared, and they sold. That is a display of a coin on the brink of death. That is not a display of a coin with a good price. It's on sale, you buy it. No, the price being low means nothing, because the price has to go up again for you to make money. And a coin like this, it's not looking that good. I mean, we look at the Bitcoin pair. That's the USDT pair. The Bitcoin pair, you just see a slow and steady death of the last 18 months against Bitcoin, completely dying, getting obliterated by Bitcoin. If you were holding Bitcoin instead of Matic, you would have, you would have money. If you're holding Matic instead of Bitcoin for the last 2 years, you wouldn't have any money. You'd be gone. You'd be broke. Okay, you'd have to sell the kids to eat bread. It's gone. You take a coin like a lot of people crucified me for my pronunciation of this word. I said peep. It's Pepe, whatever you want to say. I'm Australian. I don't have the right accent for it, I suppose. But this is a good example of a coin that looks structurally good, structurally where it needs to be at this part of the cycle. Look, I get the appeal of wanting to buy a coin that's got a low price. I get it. But the fact of the matter is, your coin shouldn't be on the floor. It's not a bear market anymore. We've been going upwards for 2 years. You need to pick a coin that's actually shown that it has some sort of interest. People are actually interested somewhat. Because it's very unlikely that you're going to pick a coin that's still on its bear market lows and it's going to blow up out of nowhere. Why would it? Why would it have attention suddenly in the peak bull market when it got no attention whatsoever in the last 2 years of upwards price action? It's irrational. It makes no sense. Pepe, Peep, whatever you want to say, has consistent higher lows. It's way higher than where it was in October 2023, which is when altcoins started doing okay. Yeah, maybe it's a little bit too high, okay? Maybe you can criticize the coin there. I'm not saying buy this coin. I'm just saying it's a good example of a coin that's very, very high. It's had a decent correction. It's had a pretty decent price. I'm not saying buy this coin. I'm just saying that's what you want to look for. Coins that are higher than where they were in the bear market, clearly higher with sustained bullish price action. That this is the Bitcoin pair that maybe they're not outperforming Bitcoin actively, but at least they're on par with Bitcoin. I mean, being on par with Bitcoin when Bitcoin dominance is rising is, in a sense, outperforming the rest of altcoins. Right, that's a very good sign. Maybe they're gradually underperforming Bitcoin. That's fine. They just can't be getting wrecked against Bitcoin, and they can't be all the way down to where they were in the bear market. I mean, be logical about your buying here. The price means nothing. It's about whether it goes up again. So I think it's a very good idea to have your coin's performance against Bitcoin in mind. Whether that's directly looking at Bitcoin dominance or not is a different question. Maybe you look at Bitcoin dominance a little bit, but it's just all about the structure. Should your coin be on the bear market lows 2 years after a bear market? The answer is no, of course it shouldn't. So we've got a question here basically asking, how do you know when the top is in? How do you know when to get out of the market? What indicators will you look at to determine the bull market top has been marked? I've got a few things. I'll look at them briefly here. We're going to do a separated separate video on this. I won't show you everything, but I'll show you just a few things here. I can quickly rattle them off. A couple of things on the RSI. First thing is the monthly chart RSI. Very, very important, okay? We've got a descending resistance line on the monthly chart RSI. Looks something like this. It has been very important in marking when Bitcoin is at or near a top, historically speaking. You can see it forming back here from 2013, marking the top in 2013's bull market, marking the top roughly, the start of the altcoin season as well, by the way, in 2017's bull market, roughly marking the top as well in March 2021, the first peak we saw that year, not the second one, but the first one. And another thing it does with the monthly chart RSI that's very important is it marks bear market lows as well. So it's not just tops, it marks the lows. We marked the low right here, stemming backwards from 2015, marked the low in 2019, marked the low almost perfectly, not quite, but almost perfectly here in 2022. And if this trend sustains, we can expect it to keep doing that potentially. So that's something I'll be looking at very closely. Another thing is the 2-week RSI. Very RSI focused, I am personally, just in general, but I mean, in terms of tops and bottoms, you can get a pretty good idea of what's going on from a macro scale just by RSIs. We've got, maybe not tops, maybe not macro tops, but pretty good indicator of when Bitcoin is heavily overbought or oversold based on, peaks on the 2-week chart RSI. We saw a peak way back here in 2011 before the first halving, peak here in 2013, the first top right there, second top marked right there, bull market marked top in 2017, pretty perfect stuff, first top marked in 2021. A little bit, front running it. It was December 2020. We ran upwards for a few more months after that. We actually marked the top here in February 2024, which is, we've seen a 7.5 month consolidation from that price region. So I'd say it's been pretty accurate. And if we start to approach that level again, that's definitely a zone you want to get really cautious around. So we'll look at that very closely as we do. Another thing I'll look at is the power law chart. A lot of people have abandoned the power law chart because it didn't work last cycle, okay? We didn't quite touch the purple line last cycle. They've stopped looking at it. But what you'll notice is actually we've touched the green line, and the green line is actually where we rejected from 74K earlier this year. One of the only charts, basically in the entire market, that predicted that we would reject from that price region. One of the only clear demonstrations of resistance in that price region. So that's something I'll be watching very, very closely. If Bitcoin comes up again and starts to approach that, say it does it in January, that will be at 100K. If it does it way later, if it does it at the end of next year, it'll be 130K. Okay, that's when 4-year cycle says. Another thing is, of course, the 4-year cycle itself. I'm very big on the 4-year cycle. You guys know that by now. 4-year cycle, it doesn't really give us a specific price target. If it did, it'd be around 130K. We've got a few formulas. We looked at that the other day. Go to my YouTube channel and just click on the video from 2 days ago. I discussed that very heavily. But 4-year cycle in terms of a date range trend predicts that we see a top in around late next year. And that's supported by presidential cycle. That's supported by the 18.6-year real estate economic cycle. There's lots of things around that. So as we approach that date, that's when you start to get a little cautious as well. And then the last thing I'll mention, there are many more things, by the way. We're going to do a dedicated video on this. But the last thing I'll mention, and I haven't really listed all of them based on importance. I've just listed a few of them I can get off my tongue quickly. The last thing I'll mention is just basic TA, structural breakdowns. Okay, so sometimes there are no indicators that specifically mark the top. Sometimes you actually need to wait for a breakdown, unfortunately. If you don't have a specific indicator that's saying, hey, look, get out right now, it's going downwards, the only way you know the top is in is if a breakdown occurs. So that's where TA comes in handy. That's when you need to learn TA, structural TA. Okay, you look at the weekly chart, for example. We give you an example from the bear market. I knew, for example, on this YouTube channel, that this was around where the bottom was meant to be as per the date range trend on the 4-year cycle. I knew it would be at the end of 2022. Very simple, very clear. 4-year cycle told us that clearly. I didn't know exactly where the price would be. That's why I said, hey, look, you should probably buy in certain zones. I had a buying plan I publicly, gave you guys in this YouTube channel. First buy was at 18.5 or something like that. Second buy was down here at like 16, and then a buy up here at like 21 or something. I can't remember exactly what it was, but basically I said, hey, look, this is probably the bottom. I'm not really sure. Let's wait for a structural breakup and then we'll get in heavily. So we waited for that break upwards. That confirmed a reversal of the trend. That reversal of the trend alongside the 4-year cycle saying that's around where the bottom would be was enough for me to say that was the bottom. Let's get in. We're going to ride this wave. And that's exactly what happened. So in the same way we waited for a structural breakout there, wait for a structural breakout to the downside. For example, right now, if we broke something like 53, 52K, that would be a structural breakdown. That would mark the top. We'd go downwards from there. That's something you look at as well. If you don't want to look at these predictive indicators, you want to actually react instead of predict, that's something you can do. Next question here. On several occasions, you've said that to establish a trend, you need at least 3 data points. But for the 4-year cycle, we currently only have 2 data points. So how can we believe in the 4-year cycle? Could you elaborate a bit on this? Now, very important to note, okay? What do you mean by 2 data points? I think I know what you're talking about. But by the way, we have 3 bull markets here and 3 confirmed bear markets. So there's 3 data points clearly for bull markets and bear markets. But the reason why developing trends, I think you're talking about developing trends within the 4-year cycle. So for example, we have a developing trend here where it takes 1,100 days for Bitcoin to go from an all-time high to breaking that all-time high in the following cycle. This time it took 850 days. My justification for that is we saw a dramatic move to the upside way too fast, way too soon. And that's why we're seeing dramatic consolidation to get back on track to where we need to be, which is the 1,100 day breakout. That will occur in November, okay? That may occur in November, in which case we will be back on track to where we need to be in the 4-year cycle. Now, you could say that that's an invalid analysis because there's only 2 data points. There's only 1, 2, and this is the 3rd one being developed right now. But the reason why 4-year cycle and trends within the 4-year cycle that pertain to things like tops, breaking all-time highs, halvings, bottoms, etc., can be used and utilized without 3 confirmed data points is because the 4-year cycle is an umbrella trend. And there's many micro trends within the 4-year cycle that support and bolster alternative trends. So for example, we've got trends here on the left-hand side of the screen. 1,400 days from top to top, 1,400 days from bottom to bottom, 400 days from top to bottom, 1,664 days from bottom to top, 500 days from bottom to halving, plus 30 days per cycle from halving to top. All of these trends are individual trends, but if you put them all together, you compile them all together, you see that they're all actually connected. If one of them breaks, they all break. They're all connected to each other. And so if there was a developing trend here with only 2 data points, but it was connected to the other ones, that trend would be valid without even having a 3rd data point because the maintenance of the trend is required in order to maintain the entire structural basis of the 4-year cycle, okay? So that's why we can take things like this, say, oh, it takes 1,100 days to break all-time highs from the last cycle, and we could say that's a trend, even though it's not actually a trend from a strict mathematical perspective, which is you need 3 data points individually and independent, right? Hope that makes sense. We've got a question here from Jacob. I'll answer the second one he's written. He's written 2 questions. I'll answer the second one. And he asked the question. He's holding assets. He's in the green. He's in profit on Bitcoin, okay? And he's asking, should I sell and buy back when the breakout occurs to minimize risk, or should I just keep holding? Now, look, I can't answer this question directly because I don't know your personal circumstances, okay? I don't know what your risk tolerance is. I don't know how much money you have in the market. I don't know if you're going to lose your house if you keep holding. But if you want a conservative approach, I really like to reiterate this on my YouTube channel a lot. There is absolutely nothing wrong with selling, waiting for the breakout, and buying back a little bit higher. There's nothing wrong with doing that. Yes, you miss a little bit of profit, right? But it's up to you. Is the little bit of profit you're missing, is the 5% on Bitcoin that you may be missing, maybe 6 or 7% at the most you're missing, is that really worth the risk, not only the financial risk, the mental strain, the sleepless nights, all of these things, looking at your phone every 2 seconds? You have to make a decision, right? And I can't make that decision for you, but I'll tell you right now, I don't like personally entering pre-breakout. I'm a breakout trader. I'm a breakout investor. I've always been that way. I like looking for confirmation. I've told you guys very clearly in this YouTube channel, I can't tell you what to do, but I can tell you what I'm doing. I'm not really interested in buying in the middle of a range. Doesn't interest me. We've been in this range for 7.5 months. If I bought back here, I'd be waiting, biting my nails for 7.5 months, 230 days of my life consumed by just waiting and waiting and waiting. What? For a price of 67K when we started this range instead of like the 71K I might get when I buy in a breakout? Like, what's the reward there? Another thing is you're locking up your money, right? That's something people don't understand as well. They don't take into consideration. Like, yeah, it's all well and good holding your Bitcoin from back here in March, but what you've done is you're locked up your assets for 7.5 months, for 230 days. You've locked up your assets in something that's not making you money. You're not getting interest on this, even having it in the bank. I mean, you're going to be getting bank interest at least, having it in some sort of lower risk asset, reaping rewards. You can make, trading, let alone trading. I mean, you could double the money by that point. That's obviously, for a lot of people, that's an exaggeration. But I'm just saying, the fact of the matter is there's no real, pressure. There's no compelling, you don't need, it's not compulsory to buy in at every single bullish macro structure. This structure is macro bullish. That doesn't mean you buy within the structure. You could just wait for the structure to break out and buy upon the breakout, because even in macro bullish structures, you still have a significant percentage chance of a downfall, right? The most bullish macro structure on Bitcoin, they've done extensive sampling of charts across different assets, S&P 500, NASDAQ, everything. The most bullish formation you can have, a descending wedge formation, has about a 76% chance of breaking to the upside. That's still a 24% chance of failure. So it's food for thought. So I can't tell you what to do. I'm not going to tell you what to do. I don't know what you should do. I don't know you. I don't know your circumstances. But I'm just saying there's no shame in waiting for breakouts before acting. Assuming the bull run is intact, what do you think will happen to the multi-year uptrend on USDT dominance? Do you think that it will bounce off support or break down? Is it a sell signal if it bounces off support? Let's look at it, okay? USDT dominance, obviously USDT being the most popular stablecoin by a pretty long margin. When this chart goes down, so by the way, USDT dominance 5% right now, which means that 5% of the total money in cryptocurrency is in USDT, right? So when this chart goes down, it means that people are deploying their USDT. They're selling it for either cash or they're selling it and exchanging it for cryptocurrency. So Bitcoin, Ethereum. What you generally see is that when there is a bull market, when the price of cryptocurrency is surging, USDT dominance will go down because people, of course, are exchanging their USDT for coins, okay? So this chart going down is a good thing. And this chart being on support is a bad thing, right? Because it means that it's likely to bounce. And if it bounces, the market crashes, okay? So right now, we have a multi-year uptrend. You're right in saying this, a multi-year uptrend stemming backwards from something like this, right? Let's just say over here in June 2019 on USDT dominance. And I'm looking at this line very closely because I know that when the price approaches this support zone, that will be a resistance zone for the entire market. That will be a very important resistance zone. I don't know if it will bounce from that level or not. I just don't know. In the past, it's gone down very steeply. For example, back here in 2022, from the bear market low, it went down from 10% all the way down to 3%. Right now, it's at 5%. The support line's here at 4%. It's not very far away. We've been down that low before. It's in a steady uptrend though, so you have to consider that as well, just over time. During the bull market, it went down quite massively. Look at the last bull market, for example, in 2020 and 2021, went downwards from 5% all the way down to 2%. It wouldn't be outside the realm of possibility for USDT to break this support line, but what I do know is this: when it approaches that support line, if there is a sign of life, if there is a sign that this thing's going to bounce and blast off, that is where you start to get a little bit cautious. But we'll cross that bridge when we get there. It's not a problem for now, it's a problem for later. Here's a good question. It's probably worth its own video as well. We'll probably do one. About altcoins, okay? When should altcoin season start if we have a normal 4-year cycle? Great question. Let's answer it very, very simply. All we need to do, literally, is overlay the Bitcoin dominance chart with the Bitcoin chart. So Bitcoin dominance, the chart in red right here, the lines in red, is a chart that measures the strength of Bitcoin in relation to altcoins. When this chart goes down, altcoins are, destroying Bitcoin. They're doing better than Bitcoin. There's an altcoin season. When this chart goes up, we're seeing a Bitcoin season. Altcoins getting wrecked. When this chart goes up, that is generally synonymous with, actually always has been synonymous with a bear market in cryptocurrency, because people flock to Bitcoin for safety during a bear market. And during a bear market where there's lots of fear, there's no greed, people flock to Bitcoin, okay? They get out of altcoins. They don't touch altcoins. It's only in bull markets with altcoin seasons when altcoins become relevant, when there's greed in the market, when people are greedy, they're euphoric, whatever, right? So all we need to do to identify an altcoin season is look at when the turning point occurs. Look at when Bitcoin dominance starts crashing in relation to Bitcoin. So for example, Bitcoin dominance started crashing, let's say around here, around February 2017-ish, in that cycle right there. What was February 2017? It was when Bitcoin broke its bull market all-time high from the last cycle. Same thing happened here in 2020, okay? Bitcoin dominance started tanking right there in December 2020. When was that for Bitcoin? It was when Bitcoin broke its prior all-time high, right? If that trend it's a developing trend, but again, we explained it before, with 4-year cycles, you can have developing trends and take them seriously as real trends due to the fact that the 4-year cycles, micro trends bolster each other. If we take that seriously, upon Bitcoin actually properly breaking its all-time high, not the scam we saw in March, but an actual 4-year cycle structured all-time high breakout, if that occurs, when that occurs, that would likely be the top for Bitcoin dominance and the start of the altcoin season. So we could literally be seeing an altcoin season start, no joke, I'm not kidding you or anything, within weeks. Now, here's something to note as well. Altcoin season is a gradual process. It doesn't get pure greed, pure euphoria straight away. During the beginning phases of an altcoin season, you generally see Ethereum doing a lot of the work, Ethereum outperforming Bitcoin. And then as people get more and more and more greedy, the market rises more and more and more, there's new money coming in every single day, you start to see towards the end of the altcoin season, that's peak euphoria. That's when you got micro cap coins on PancakeSwap, on Uniswap, popping off 100x every single day. That's what people talk about when they're talking about an altcoin season, but it's actually a more generalized thing. But yes, in terms of a broad altcoin season, if we're seeing a 4-year cycle on a regular level, it probably should start when Bitcoin breaks all-time highs properly. That's probably when it should start. There's no guarantees, but that's probably when it should start. So guys, thank you for watching that video. I hope you enjoyed it. There was a lot of useful content there. I recommend you go back and look at the stuff you didn't look at if you skimmed through it. Really appreciate your support, guys. Leave a comment, like, and subscribe down below. Really helps me out. Just comment anything. Literally go down there and drop a smiley face. It just helps out the channel, helps out the algorithm. I really appreciate if you do that. I'll mention again just a couple of things here. We've got the Bitfinex exchange and Blowfin. Again, use my referral links down below. 15% trading fee discounts with my referral links attached to your account forever on Bitfinex. Similar on Blowfin. You're getting rake back. You're getting access to a reward center with 5,000 USDT in rewards. These exchanges have never been hacked before, guys. Never before have they been hacked. They've got reserves information released, hundreds of trading pairs. Use my links down below. Help yourself and help me. That's the best combination, really. So check them out if you're interested. Up to you, though. No pressure. I use Bitfinex personally, as I've mentioned. And the last thing I'll mention is the VIP group on Telegram. I trade altcoins there 4 times a week. I post my altcoin trading plan videos with my entry zones, my sell zones, my take profit, stop loss zones, everything you need. You're also getting access to a group chat if you pay for that membership. So you're getting signals and a group chat as well. Good stuff all around there. We've got a PDF document, fully transparent with all of the historical trading results. You don't need to go in blind. You can look at the results, analyze them, see if you like the results, see if they're favorable in your view. 78% win rate over the course of 2 years. Very good stuff in my point of view. Check it out, guys. Thanks again. Comment, do whatever you want. See ya.